Hello everyone, welcome to Options with Doug, streaming live on Monday, Wednesday, and Friday at 1:30 p.m. Eastern Time on Bookmap Discord and the Bookmap YouTube channel. Before I get started, I need to go through the disclosures. General disclosure. All Bookmap limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure. Trading futures, equities, and options involves substantial risk of loss. It is not suitable for all investors. Past performance is not necessarily indicative of future results. Here's my contact information. The best way to get in touch with me is through Discord. My name on Discord is Doug P. Also in Bookmap Discord, there's an Options-Doug chat channel. That's a great place to post questions, comments, and content related to the topics of my presentation and the topics of the channel that I'll go through in just a moment. I'm also on X. My name there is @Pless. Here are the key tenets to my approach for trading. This is the basis of my approach to trading. I believe that options trades and market maker hedging activity are key drivers of price in many stocks and futures, and certainly in the large cap tech stocks like the Magnificent Seven stocks that I follow and trade, as well as the equity index futures like the S&P 500 and the NASDAQ 100. And for the S&P 500, SPX is the underlying index, SPY is the ETF version of that index, and the ES futures contract is a derivative of SPX. And when traders buy and sell puts and calls in SPX and SPY, market makers take the opposite side of those trades and they hedge their delta exposure with ES futures. And for the NASDAQ 100, NDX is the underlying index, QQQ is the much more liquid ETF version of that index, and the NQ futures contract is a derivative of NDX. And just like the S&P 500, when traders buy and sell puts and calls in NDX and QQQ, market makers take the opposite side of those trades and they hedge their delta exposure with NQ futures. The focus of my presentation today and the focus of the Options-Doug chat channel is options order flow, the impact of options markets on stocks and futures, and the influence of market maker hedging flow on price action. I have a two-step process for trading, and the first is planning, and I use positional analysis. I look at how traders and market makers are positioned in the options market and how those positions change from day to day to develop a thesis regarding the expected trading range and volatility for the day, as well as a directional bias. And the second step in my process is execution. I look at real-time order flow in Bookmap and real-time market maker hedging flow in Spotgamma Hero to confirm my thesis. And for setups, and when I talk about setups today, setups can be taken, I will be focusing on an underlying asset, and setups in an asset, and that asset can be taken with futures contract shares of stock or options depending on what asset we're talking about, as well as the way you want to trade. Questions and comments are welcome, and I will be watching both the Options-Doug chat channel as well as the chat and YouTube for your questions and comments. Please feel free to post. I'll do my best to answer your questions. And hello, Gray, Stephen, welcome. Glad you're here. And Gray asks, I hope we have time to cover the big move down yesterday as well. Yeah, I will discuss that. Yeah, for sure. Interesting couple of days in the market. All right, here's my agenda for today, Friday, July 12th. First of all, I want to go over news items, economic data, and events for today. I'll talk about yesterday as well. And then I'll go through my positional analysis. Then I'll review some setups from earlier today. And then I'll take a look at the live market. And when I get to the live market, if anyone has any stocks they want me to take a look at, please let me know and I'll be glad to do that. So please start thinking about stocks you want me to take a look at. I should have time. All right, let's get started with news items, economic data, and events. So first of all, for today, PPI data came out 8:30 a.m. Eastern Time, and that was greater than expected. It looks like greater than expected across the board, and the market has rallied yesterday, and I'll talk about this more in just a few minutes. CPI data came out less than expected, and traders aggressively rotated out of large cap tech stocks into the rate sensitive areas, small caps, home builders, and of course the large cap tech stocks really drive the market. So big down day in the market, and especially for the NASDAQ yesterday. Go figure. And today, PPI data again came in higher than expected, and the market has rallied. All right, so that's PPI data. Then Michigan's consumer sentiment came out at 10 a.m. today. Not much of a reaction to that data, and that was less than expected, less than previous. All right, so that wraps up the data for this week. Also note that bank earnings did begin today. I really don't follow the financials too closely, but I believe pre-market some of the financials were down. Maybe Citigroup was up. All right, so here's the reaction to the PPI data, 8:30 a.m. Eastern Time. Big move down initially, and then a move up. Let's just take a quick look. So yesterday at the close of the day, this 556, SPY 556 level, that was the zero gamma level yesterday, and that was the support level, the low of the day. So initially this morning, the S&P 500 sliced through that level almost to the SPY large gamma 3, and that is also the zero gamma level for today. Price rebounded quickly and continues to move higher. All right, so that is the reaction to the data. Again, I'll take a look at a chart of the Magnificent Seven in just a few minutes and talk about the big move down yesterday. All right, so before I take a closer look at this chart, this is Bookmap, ES Futures and Bookmap. Before I take a closer look at this chart, I'm going to take a look at a higher time frame. I'm going to go to the SPX, the underlying index. This is a 1 hour, 1 day chart, 1 year, 1 day chart in Thinkorswim for SPX. We've all seen this chart before. I'll go through this quickly. April 1st this year, correction began. Rally resumed the Monday after the April put-dominated options expiration. A little bit of a pullback after the May options expiration. Consolidation around the June heavily call-dominated expiration. The rally resumed beginning of July. So let's pick up a view of SPX with a 30-day 1 hour chart. It may be difficult to see on your screen. This is the June 21st options expiration, consolidation before and after that. Rally resumed beginning of July. That's July 2nd right there. And yesterday, SPX opened up above the upper weekly expected move and quickly reversed lower as traders aggressively sold calls in the Mag 7 stocks. And now it looks like SPX has completely recovered that move and trading now at a new all-time high. All right, let's take a look at the levels on this chart. First of all, the dashed purple lines are showing the lower and upper weekly expected move. This is based on the options market. These levels are based on the closing price for SPX from last Friday that remain in place for the entire week. Then the dashed blue lines are showing the lower and upper daily expected move, also based on the options market, based on the closing price for SPX from last Friday. SPX trading well above that level in the second hour of trade today. The dark red lines are Spotgamma levels. These are based on gamma-weighted open interest. I'm going to point out the key daily levels. And let me zoom in on this. Yeah, I don't know if let me try this. All right, there we go. All right, so the key daily levels. There's a cluster of levels here. First of all, 55.50 is the absolute gamma strike. That's a strike with largest absolute positive and negative gamma. And so that's where most of the gamma-weighted open interest is concentrated. And just above that is the put wall at 55.55. That's a strike with largest net negative gamma that can be expected to act as support. That level did move up substantially from yesterday, from 5,300 yesterday to 55.55 today. And then just above that is the volatility trigger at 55.60. That is Spotgamma's proprietary volatility flip level. Below that level, market makers' position on the gamma curve is negative. In a negative gamma environment, market makers have to trade with price to hedge their delta exposure. That tends to enhance or increase volatility. Above that level, like SPX is trading now, market makers' position on the gamma curve is positive. In a positive gamma environment, market makers have to trade against price to hedge their delta exposure. That tends to subdue or decrease volatility. So a big cluster of levels there. And the volatility trigger also shifted higher. So the put wall volatility trigger shifted higher. Absolute gamma strike remained in place at 55.50. And then the call wall moved back down to 5,600. It was at 5,700 yesterday, moved back down to 5,600. Same level as Wednesday. And now SPX is trading above the call wall, technically, again, in an overbought situation, although the S&P 500 is still trading below the SPY 565 call wall. All right, so for the SPX, volatility trigger, put wall shifted higher, call wall shifted lower. Sky Blue Anurag, hello, welcome, glad you're here. Ask what was your thesis for the day and why, please. So when I get through with my positional analysis, then I'll talk about my thesis. And I'll talk about that in just a few minutes. All right, so the S&P 500 trading up toward this combo 3 level, right around 56.50. All right, so let's wrap up our view of SPX with a 1-minute chart. Let me zoom in on this just a little bit. So this is the big move down yesterday, and SPX now trading above the high of yesterday. Above, again, the call wall, upper daily expected move, and upper weekly expected move. All right, let's go to Bookmap now. So in Bookmap, again, I have my own cloud notes. And on Wednesday, I explained in more detail how I get all these levels on my chart. So I have my own cloud notes, so I can show SPX levels. Here's that combo level that price is approaching. Here's the 5,600 call wall. Note there's a difference in price between ES and SPX. And today it is right now closer to 52. This morning it was at 51. That's what I posted in Discord. I did change that to 52. So the SPX 5600 call wall is at ES 5652. Also have SPY levels on this chart. Here's the SPY 557 absolute gamma strike that acted as support this morning. And then here's the SPY 565 call wall up above. So according to the SPX, the S&P 500 technically overbought, but still below the 565 call wall. And we'll talk about setups in a few minutes. All right, I talked about shifts and levels for SPX. For SPY, volatility trigger shifted lower, and the absolute gamma strike also shifted lower. So 2 shifts lower for SPY. So kind of a mixed picture for the levels for the S&P 500. All right, let's move on to NASDAQ. We'll go to the NQ futures and Bookmap. Very similar price action. Let's take a quick look at the underlying index charts. First of all, QQQ. This is the reaction at the 8:30 a.m. PPI data release. QQQ traded down to the 490 put wall to the tick. Then after the open, this 492 level acted as support. And note, QQQ trading above its volatility trigger. And for QQQ, the call wall is still up above at 500. 490 is also the absolute gamma strike. So big move higher for QQQ today. And for QQQ, there was a bearish hat trick in level shifts. The volatility trigger call wall and absolute gamma strike all shifted lower. All right, so that's QQQ. A lot of Spotgamma levels in play for QQQ. Let's take a quick look at NDX. So NDX has still not recovered its high from, still not recovered its high from yesterday. Whereas SPX now again trading above that level. Excuse me. All right, so NDX finding support around this combo level at the open, put wall down below. NDX trading above its volatility trigger, and looks like it's running into a couple of spot gamma levels up here, a large gamma 4 level at 20,500 and combo 2 level at 535. All right, and for NDX, there were actually just like the SPX, the volatility trigger and put wall both shifted higher. So kind of a mixed picture for the NASDAQ as well. All right, so again, I have my own cloud notes, so I can show QQQ levels. There's that 500 call wall just up above, just like SPY call wall just above. Here's the NDX 290 volatility trigger. 190 put wall. And here this cluster of levels acted as support. That is the 492 large gamma 4 level, as well as that 20,211 combo 3 level, acting as support right around the cash open. All right, so the rally continues. Let's wrap up positional analysis by taking a look at gamma notional. This is market maker's position on the gamma curve at the beginning of the day. So I'm going to take a look at gamma notional. This is the data table at the end of the Spotgamma AM Founders Note. A lot of great information in there. All right, so this is gamma notional, market maker's position on the gamma curve at the beginning of the day for the S&P 500 and NASDAQ. Note for the S&P 500, gamma notional still positive at the beginning of the day. So in this case, Spotgamma assumes that traders are short calls, market makers are long calls, hence the positive gamma, and they have to trade against price to hedge their delta exposure. Now the S&P 500 trading above the volatility triggers and gamma notional becoming more positive. And for the NASDAQ, these numbers did shift negative from being positive yesterday. All numbers shifted lower from yesterday, so less positive for the S&P 500, and now negative for the NASDAQ. And now, with this rally, the gamma notional for the NASDAQ should shift to positive. All right, so Sky Blue Anurag asked about my thesis for the day. Actually, I had a primary thesis and an alternate thesis. So just based on the shifts in levels, especially the bearish hat trick for QQQ, my directional bias for the day was bearish. And then based on mean reversion, and the big move down yesterday looking for mean reversion around that level, my alternate thesis was bullish. And also based on the shift down in gamma notional across the board, I was looking for higher volatility, and now turning out to be a big trend day. So what it boiled down to is watching the hedging flow and order flow to determine what was going to happen during the day. And we'll take a look at that in just a minute. All right, so Sky Blue, I don't know if I can answer your second question about confusing points, doubts. Again, I had a primary thesis, alternate thesis. Alternate thesis is playing out today based on the hedging flow and order flow today. Hello, Hector. Welcome. Glad you're here. All right, Hector, first of all, asked, wondering for options, what would be better if open an account at Ameritrade or TradeStation All right, for options, I trade options on Thinkorswim, which is TD Ameritrade, and also Tasty Trade. And I recommend, especially if you want to get Spotgamma levels on a chart, I would recommend Thinkorswim. So that's Schwab, Thinkorswim. And Hector asked for mean reversion. What do you consider point of control or specific Spotgamma level? So mean reversion, I'm looking for, again, order flow and hedging flow. We'll take a look at that in just a minute. So I don't look at longer term volume. Well, I do look at volume point of control during the day, but I really don't consider volume profile or anything like that. Nothing wrong with that. All right, Hector. So again, if you want to trade options, you can trade stocks and options. One thing, if you do trade stocks, if you'd like to trade off the Bookmap chart, TradeStation is integrated with Bookmap. But if you're only trading options, I would recommend Schwab Thinkorswim. All right, so let's move on now. So everything that we've taken a look at so far is based on, other than Bookmap, based on static data. And now let's move on to execution, look at real-time data. And actually, before I do that, I do want to talk about yesterday just a little bit. So what this chart is showing, this is a 5-day hero chart for the stocks known as the Magnificent Seven. So this is beginning on Monday, going through the current time right now. All right, so what this chart is showing is the hero signal and price in terms of QQQ. So white line is price for QQQ, and the orange line shows that traders were buying calls, rising orange line, traders buying calls. That's up to the close on Wednesday. And the blue line shows they were selling puts, slightly rising blue line. And then both lines moved sharply lower yesterday. And now have started to recover today. So yesterday, again, with the CPI data, it looked like to me that traders were rotating out of the large cap tech stocks, the Mag 7 stocks that had moved significantly higher, taking profits, rotating that money into more interest rate sensitive areas like, again, home builders, large small cap tech stocks. And now today they are back in, the dip buyers are back in, mean reverting price action, coming back in and buying. So this is the right around the open today. Traders have been aggressively buying calls. They started selling puts yesterday afternoon. Now today they are selling puts and buying calls. Blue line, orange line moving in the same direction. Very powerful directional indicator. All right, so that is the picture from yesterday. I mean, that's all gray. Maybe you also one other point about yesterday. Spotgamma has been pointing out for some time the heavy concentration in the Mag 7 stocks, as well as the very low correlation. And in a low correlation market, that typically indicates that a few stocks have been driving price higher. All right, so that gray, I hope that helps. Again, if you subscribe to Spotgamma, take a look at the founder's notes, AM and PM from earlier this week, focusing on that concentration and very low correlation in the market that apparently broke yesterday. All right, let's move on now to today. All right, so I'm going to start with what options traders have been doing today. So this is the hero signal again, showing options trades, market maker hedging activity. Hero, this is provided to Spotgamma subscribers. Hero stands for Hedging Impact Real-Time Options. Two lines on this chart. This is price for SPX. I'm showing this signal is showing options trades and market maker hedging activity for a combined signal of SPX, SPY, XSP, and ES futures. So this is the index signal for the SP 500. Again, white line is price for SPX, and the purple line is the hero signal. A falling hero signal indicates traders are taking negative delta options positions. They are selling calls and or buying puts. And a rising hero signal indicates they are buying calls and or selling puts. All right, so that is one signal that we can take a look at. All right, Actine bull, I'm not sure. I was looking at 5 days, so I was looking at Monday through Friday. All right, so this is the first signal that we can take a look at for the S&P 500. And there's another signal. This is the S&P equities. So this is a combined signal of options trades and market maker hedging activity for all 500 stocks in the S&P 500. Typically, the index signal is more noisy, more choppy than the equity signal, but can often provide more of a leading indicator sometimes. So this signal, smoother, and in this case, more in sync with price action today. So this is what we'll take a look at. I'm going to actually, let me go back to the S&P 500 and shift to puts and calls. And you can see that traders have been buying calls in the SPX and SPY. Now let's move on to equities. They've also been buying calls in stocks. That's shown by the rising orange line. When traders buy calls, market makers sell the calls. They have to buy stock to hedge the delta exposure. So again, the equity signal here in this case, especially showing calls more in sync with price action. Let's go to full screen. Traders buying calls pretty much from the open. Flow alert that comes in at 9:50. Again, traders buying calls. Let's go to Bookmap now. Take a look at the S&P 500. $9.30. S&P 500 finds support at the SPY 557 absolute gamma strike, as well as VWAP shown by the light blue line there. Takes a few minutes, but aggressive buyers start to come in. That's shown by the green volume dots. The volume dots show market buy minus sell. Magenta dots indicate more sellers than buyers. Green volume dots indicate more buyers than sellers. As traders are taking positive delta positions, price starts to rise. Aggressive buyers come in again, shown by the green volume dots, also shown by the rising cumulative volume delta. That's the magenta line that changes to dark blue when it goes positive. Yellow line is showing buy stop orders fueling that move higher. And then finally, the light blue line is showing large traders buying that move higher with iceberg orders. Let's zoom in on this just a little bit. So again, aggressive buyers come in, buy stop orders fueling the move higher, shown by the yellow line as well as the on-chart indicator. Also note, large traders buying with iceberg orders. That's shown by this sharply rising light blue line. This is 1,039 contracts and 7 executions. May be difficult to see this number here. That's 2,400 and 15 executions, over 2,516 executions. And as price continues to move higher. Large traders start to sell with iceberg orders. And note they really come in pretty strongly up here. Selling with iceberg orders shown by the on-chart indicator. Also note these lines here indicating these iceberg orders are, oops, wrong tool. These iceberg orders are staying in the order book until they're finally filled more. And finally, that selling pressure helps to move S&P 500 lower, right around 11. So the iceberg orders started around 11:15 to 11 to 12 noon. Let's see what options traders are doing. Let's go back to Hero. And this is when the call buyers start to take their foot off the gas. Then they start buying again right around 12:50. Let's jump back to the index signal. Note the call buyers take their foot off the gas, then they start also buying calls right around 12:50. Let's go back to the equity signal. All right, let me check for questions. Sky Blue asks, why are large traders buying with iceberg orders when they usually sell? You would have to ask the trader. So I'm just reporting what I see here. So that is large traders fading price action is more typical behavior. But yeah, today they were doing the opposite. So this rising light blue line here just adds more strength to this rally. So if I see traders buying options, taking positive delta positions, aggressive buyers shown with cumulative volume delta, large volume dots, buy stop orders, and buy iceberg orders, I want to get long. So every signal that I have was pointing to get long. And here, notice as price continues to move higher, then large traders start fading that move with iceberg orders. So initially, from here to here, actually, if you consider everything, from here to here, let's say around 11:15, this is all extremely bullish. Everything that I look at as an indication of direction was extremely bullish. And the large traders did start trading, did start fading that move higher. All right, so for iceberg orders, so the icebergs, yeah, I'll show my settings real quick here. So I have that as an on-chart indicator, and sub-chart, I'll show this sub-chart. I use sum mode, both for stops and icebergs. All right, Sky Blue says, purple line stayed on the screen. I assume you mean that right there. Earlier I saw that was canceled. So that's not showing now. All right, let's zoom out. All right, so when traders resumed buying calls, aggressive buyers came in around the upper weekly expected move. Now price continues to move higher. And Hector says, still pending of study inflection ultrazone. This would be optimal point for hedging with options. Sorry, I don't understand your question. It looks like I am seeing some lag on YouTube. Is anyone on YouTube having any issues? Stephen, are you watching on? Hello, Floyd's Garage. Hello, Caesar. Welcome. Glad you're here. How did I get purple? Sky Blue asked, how did I get the purple line for icebergs? That's drawn automatically. That's part of the on-chart iceberg indicator. All right, let's move on. NASDAQ. Let's see what options traders have been doing in NASDAQ. So just like the S&P 500, there are two signals that we can take a look at. The first, the index signal, shows options trades and market maker hedging activity for a combined signal of NDX and QQQ. Pretty noisy signal today. And here's the other signal. This is equivalent to the equity signal for the S&P 500. And this is showing options trades and market maker hedging activity for a combined signal of the stocks known as the Magnificent Seven: Apple, Amazon, Google, Meta, Microsoft, NVIDIA, and Tesla. That's what they were selling aggressively yesterday. And now the dip buyers are back in, buying calls. That's shown by the rising orange line. Let's go back to full screen. Traders buying calls. Again, when traders buy calls, market makers sell the calls. They have to buy stock to hedge their delta exposure. All right, Sky Blue says, yes, there is a lag on YouTube. Yeah, I don't know if I can do anything about that or not. I've noticed a little spinning wheel occasionally on YouTube. Everyone, you're more than welcome to join us on Discord. I'm streaming in Bookmap Discord as well. All right, so let's take a look now. So we know that traders have been buying calls in NASDAQ. So looking at NASDAQ NQ futures and Bookmap. Support at the 492 as well as the NDX 20,211 combo 3 level. Aggressive buyers start to come in, just like the S&P 500. Large traders buying with iceberg orders. Cumulative volume delta rising. Buy stop orders fueling the move higher. And that levels off about the same time as the S&P 500. And then just afternoon, traders start aggressive buyers start to come in. Again, green volume dots. And the NASDAQ up at highs of the day. Let's go back and take a look at Hero again. All right, so it looks like a large block order in one of the Magnificent Seven stocks. We'll take a look and see if we can figure out which one. So that is a large block order. Some institution selling a large number of calls. Again, in one of the Mag 7 stocks. Looks like as The call buyers have taken their foot off gas. Now price is consolidating. All right, let's move on. Let's take a look at some stocks. All right, Steven says, YouTube not bad, still watching. All right, Hector says ultra inflection zone of Theo trade. How would you determine such zone? So I don't know anything about the ultra inflection zone of Theo trade. Sorry. So I would send that question to support@theotrade.com. All right, so let's take a look at some stocks now. Let's start with Apple. Stocks, to me, are typically much more simple to look at. This is one reason that I really like to trade stocks. So Apple, call buyers come in from the open, flow alert signals significant options activity to get your attention. Call buyers, take the foot off the gas right around 11. Price consolidates. Now they've started to buy calls again. Note that price did breach the 230 call wall key gamma strike. That's a level where most of the calls are concentrated. For a stock, Spotgamma assumes that traders are long calls, market makers are short calls. As price moves above that level, all those calls at that level go deeper in the money. Market makers' delta becomes more negative, and they have to continue to buy stock to hedge their delta exposure. All right, so let's go take a look at Bookmap. Let's go take a look at Apple. Traders buying calls from the open. Breach of the 230 call wall key gamma strike. This is the market pulse price change indicator here in Bookmap in the subchart. And I use these extremes to help to confirm long entry points. So again, that's the market pulse price change indicator. And in the case of a bullish entry, I'm looking for these dark red areas. For long entries, there's a pullback to VWAP, pullback above VWAP. All right, so that's Apple. Next stock, AMD. AMD has been a great stock to trade this week at a couple of setups. And yesterday, it moved up above the call wall, then reversed lower as everything else was reversing lower. Primary target 180, key gamma strike, just the opposite today. So today, AMD found support right at the 180 key gamma strike, moved up pretty quickly to the 185 call wall. Let's see what options traders are doing in AMD. So as price touched the 180 key gamma strike, traders started buying calls. Note a couple flow alerts. Get your attention, signaling significant options activity as traders buy calls, and as price reaches the 185 call wall, call buyers take their foot off the gas, and price has been consolidating, now trading slightly above the 185 call wall. So a good trade in AMD from the 180 key gamma strike up to the 185 call wall, driven by call buyers. So again, when traders buy calls, market makers sell the calls, and they have to buy stock to hedge the delta exposure. Price moves up to the 185 call wall and then consolidates as the call buyers take the foot off the gas. And Caesar says no put traders to be found in AMD. Yeah, call buyers definitely driving price in AMD today. All right, the next stock I want to take a look at is NVIDIA. So call buyers coming back into NVIDIA as well. Up to the 130 key gamma strike call wall. And price does breach that level, but around 11.15, call buyers take the foot off the gas. Looks like they've started buying again. And here's that large block trade that was in NVIDIA. Large institutional orders selling calls, shown by that vertical line, that sharp drop, and the call line for NVIDIA. So remember, we saw that line in the Mag 7 signal. And Hector asks, is it possible to set an alert on Thinkorswim or Bookmap once it's near an important Spotgamma level? Yeah, sure. So you can set alerts in Thinkorswim or Bookmap. I usually set alerts in Thinkorswim. That's just what I'm used to. But I believe you can set alerts in Bookmap as well. But I've always set alerts in Thinkorswim. And Sky Blue asks, how do you know if the alert, that let's say the flow alert, you're asking call alert, it's actually a hero flow alert, is for calls or puts. Spotgamma does not distinguish whether the alert is for calls or puts or both. They show the alert on the call line, but they do not distinguish whether it is calls or puts. And Sky Blue asks, how do you estimate that? I'm not sure what that means. Is it basically that key gamma strike will hold a support? All right, so regarding any spot gamma level, I typically assume that it will act as support if tested from above or act as resistance if tested from below. But I confirm that with hedging flow here in Hero, as well as order flow in Bookmap. So I just don't automatically say this is going to hold as support or resistance. Again, I confirm that with order flow and also hedging flow. All right, so bullish day in NVIDIA, trading above the 130 call wall, key gamma strike. Market pulse price change indicator, helping to mark the deeper pullbacks for long entries. A couple of nice pullbacks to VWAP. And the rally continues in NVIDIA, again above the 130 call wall, despite that large block order. All right, the last stock of the day, Tesla, great move today. Put wall to call wall move in Tesla. Whoops, sorry about that. All right, in Tesla, 235 is the put wall. Price did move below that level and moved up to the 250 call wall. Let's take a look at Hero, see what options traders are doing in Tesla. Again, the stock of the day. $235 put wall. As price moves down below that level, traders start selling puts, shown by the rising blue line, start buying calls, a couple of flow alerts come in, and traders continue to take positive delta positions until price reaches the 250 call wall key gamma strike. Then price has been consolidating around that level. I'm going to shift to the total signal so we can combine puts and calls here. I'm going to have to jump back. All right, so after this move up to the call wall, from the put wall to the call wall, now the hero signal is chopping up and down. Looked like there might be a little bit of a short scalp at the 250 call wall. That really didn't last long. Too many aggressive buyers in Tesla. And I believe Tesla was actually downgraded today or yesterday. Probably, well, I think, I'm not sure again, today or yesterday. Goes to show you. Can't pay much attention to the news. All right, Tesla stock of the day. From the 235 put wall to the 255 call wall. All right, Sky Blue wants to take a look at my settings for the on-chart indicators. Stops and icebergs for on-chart indicators. I think I'm pretty much using the defaults here. I did change the colors. So there you go, Sky Blue. You can take a screenshot if you want. There's the iceberg settings. I suggest using this as a starting point, then setting what makes sense to you. And there's my settings. Oh, this is the stop settings. All right, so there you go. Again, take a screenshot. All right, does anyone have any stocks they want me to take a look at? By the way, it looks like there's a pretty significant lag on YouTube. You are getting everything, it looks like, but there is a lag. So again, everyone, you are welcome to join us on Bookmap Discord in the future. All right, does anyone have any stocks they want me to take a look at? So it looks like the S&P 500 finding resistance right around this cluster of levels. Again, below the SPY 565 call wall. Let's check NASDAQ. Sky Blue asks, isn't all the news of stocks a problem to trade stocks versus futures? No, not to me. I would say pay more attention to what traders are doing today than the news. So you can see Tesla, it would be better to ignore the news or not hear the news and just watch what options traders and aggressive buyers are doing, buyers and sellers. All right, so it looks like NASDAQ also may be finding resistance. Maybe just another pullback. Hector asks, would those flow signal on Hero could be determined first impulsive leg What's the interpretation of such signals? Let's go back to Hero. All right, so my interpretation of Hero here is this is very typical. Very typical. Quick move higher in the morning, and then mid-morning to noon, options traders start to take the foot off the gas. All right, Kenobi wants to take a look at Robinhood. I don't have that in Bookmap. The shift to puts and calls. So traders buying calls, and then they started selling puts. Sorry, I'm going to zoom out. Sorry, auto zoom. Large block order. Buying calls right around 10:15. Then a couple of large block orders selling puts. So net for the day, traders are selling puts and buying calls. Robinhood up on the day above the 22 hedge wall key gamma strike. Lucid. Buying calls and Lucid. Pretty low price stock here. 350 is the call wall, key gamma strike. Traders buying calls, Lucid moves up. Sam asked about Mars. Mars stock, I'm not sure. Do you mean Mara? Sorry, I don't, oh, Mara, yes. I need to, so Mara, there you go. Sorry, I was a little bit too far away from my screen. All right, so Mara, there you go. Traders buying calls, price above the 220 call wall key gamma strike. Traders have been buying calls all day, driving price higher. And you're welcome, Kenobi. All right, everyone, my time is up. I want to thank you very much for watching. Thanks for your questions and comments. Have a great weekend, and I will see you on Monday. Thanks again. Bye.